Nvidia stock is in the 130s, and earlier today, the stock dropped to the 127s. Now, if you are familiar with this channel, you guys know that I mentioned that Nvidia is one for the patient investors, as this company gives opportunities to those that are patient. I believe those opportunities are getting closer and closer. And on today's episode, I want to share my overall thoughts of what's happening with Nvidia. Why are we seeing this negative pressure on the stock? And at what price points would I feel comfortable adding to my number one position in my overall portfolio? So let's get started. But first, make sure to hit the thumbs up. Make sure to hit the subscribe button, as this is going to be the best place you're going to find any semiconductor and AI news. Also, check out this pinned comment for special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see the stock today ended a day at $130.39, down roughly 1%. At one point, the stock hit under $127. So if we take a closer look at the media, there's a lot of things impacting the semiconductor market, right? So Nvidia stock slide amid AI spending slowdown, fears increased in competition. We're also hearing about kind of the antitrust funds in China. So let's start with everything. And we're also hearing things like overheating issues. So I think those are the four main things. So first is the spending in AI slowing down. Now, one of the root causes of something like this is I feel investors just get impatient. I mean, we heard in a month or 2 months ago, TSMC reported that there's still such a strong demand for AI. They can't keep up with the demand of AI solutions. We've heard from all big tech players that they're going to continue to invest in CapEx and continue to invest in AI infrastructure. Yet, many believe that while this AI market is evolving at rapid levels, in the past month or two, all these big tech companies that mention that CapEx increase, that they're building AI data centers for the future, are going to start slowing down in the next, have changed tone in the past few weeks. And overall, I can't see why there's any truth to that. I think the market, unfortunately, just gets very impatient, especially because AI is such a new thing, right? Everybody's worried about AI and how it's changing. And it started out of nowhere. So many people are expecting, since it started out of nowhere, it's going to end out of nowhere as well. So everybody, every day, every week needs some form of reconfirmation that AI is here. And I'm pretty sure if you've been watching these videos on my channel, we have talked about various AI solutions, how we're still just kind of in the early innings of this market. So I don't believe AI spending will slow down anytime soon. Now, I want to say there is possibility that there are cycles, and the cycles is very normal in the semiconductor space. If there are cycles, that can definitely create bearish sentiment for companies like Nvidia. But I believe in the long term of things, we are going to go in a nice uptrend in AI spending. That line is not going to be straight, like I mentioned, due to cycles, but the overall trajectory is going to be in an uptrend, if that makes sense. At the moment, I don't think we're in the cycle where we're slowing down, but it does seem like the market is kind of fearing that. Now, the second thing we are hearing is kind of investors are worried about Nvidia competition. Now, let me say there's no competition for Nvidia right now. Many investors are worried that companies like Broadcom, which just reported earnings, and in the past 5 days, the stock is up over 33% because they are providing semi-custom solutions to big tech players. So companies like Google, which develop their own AI accelerators, are using Broadcom, and they're spending even more and more money making more AI chips. So many people are believing that, hey, look, because Google is most likely going to be spending more money on AI chips that are designed, kind of co-designed with Broadcom and Google, they're going to spend less money on Nvidia. And that's definitely not the case. For those that are not familiar, GPUs that are designed by Nvidia versus these ASIC accelerators designed by like Broadcom have two different use cases. If you want to continue to grow in the clouding market, if you want to continue to innovate in the AI space, you need a lot and a lot of GPUs. So This is where I believe the market is creating this fear of competition. There is no competition for Nvidia right now. The third thing that I mentioned were kind of the overheating issues that I discussed in yesterday's episode. And those overheating issues and any issues that we're seeing right now, in my opinion, with the Blackwell platform, I believe are nothing burgers. Like I mentioned in yesterday's episode, Nvidia right now is under such a microscope that any issues becomes a red flag. And issues in the design phase, in the testing out, in the validation phase, usually come up with errors. And that's why they go through these phases to make sure things are fixed before going to mass production. And that's what I believe is happening right now. This is such a normal event from my engineering experience that I've seen before. You always have some errors. You're able to fix and reverse engineer those errors. The errors that we're hearing are not specifically with NVIDIA's chips. They're more with like power solutions and other types of solutions out there. So those are things that can be reversed engineer and topics and products that have multiple competitive players. So it's different if it was NVIDIA's AI chip. That would be something that would be very hard to reverse engineer. But the other components are, in my opinion, nothing burger. Now, NVIDIA's products are so much better than anything out there. So again, competition is not something in my worry list. Now, the final thing is kind of these talks of China fighting back and more export regulations. We've heard from NVIDIA, we've heard globally, AI demand is increasing at rapid levels. So again, that's not something I would worry about. So I wanted to kind of talk about that before I got into the next segment of the episode, where I want to talk a little bit more about prices. And if you guys know me, this is something that I normally don't do. But in every episode, not every episode, in most episodes, I mentioned that NVIDIA is a company that's for the patient investors. I personally got a lot of heat just a few months ago about a month ago, when NVIDIA was sitting in the 145s, and I said, I personally wouldn't buy at those levels because of my risk to reward ratio. Remember, everybody has their own personal finance and everybody's portfolio is different. My portfolio, over 0.25%, is made up of NVIDIA. That cost basis is very, very low. And remember, over a quarter of my portfolio is NVIDIA. So that gives me the flexibility to be very, very patient on when I would want to add to my overall position. I already have a big position, so I'm not over there trying to grab every share as possible, right? Because I already have a very, very heavy dosage in my portfolio. And this is why everybody needs to understand where they are in their portfolio. Now, I mentioned as a patient investor, I personally would enjoy NVIDIA under the 130s. So I have some kind of values here, and these are earnings per share. These earnings per share are the average estimates by analysts. And for those that are not familiar, NVIDIA ends its calendar year on the end of January. So about a month from now, NVIDIA is going to end its fiscal year 2025 calendar year. So that's going to be, they estimate to be roughly $2.95. The year after that would be $4.43, and the year after that is $5.59. January 2025 is about a month away, so I would consider this closer to like the trailing 12 months. January 2026 is about a year away, and January of 2027 is about 2 years away. So the 2026 and 2027 are the ones I'm really looking at when I'm looking at valuations and kind of where the stock is at right now. So based on these estimates at $130, the next year's PE ratio is sitting right now at 29.30, about 29 if we're using these analyst estimates. Now, I also have a bullish earnings per share, which is only a 10% beat. For example, for 2026, and analysts on average are expecting $4.43. I gave it an extra 10%, which is $44.87. But that's not the most bullish scenario out there. If we look at earnings estimates, there are some analysts that are expecting over $6 for next year's estimates. So when looking at these numbers, we can see at current valuations of 130, it's nothing that I would say undervalued on current estimates. For example, 2026 is about 29, 2027 is about 23.25. So this is where I believe it's a decent valuation. Nothing too crazy, but nothing too attractive based on analyst expectations. Now, if we give it a nice earnings, a nice 10% beat, those numbers actually drop a nice amount. Earnings per share for next year drop down to roughly 27, and 2 years from now drop down to 21. Now, if you do believe these analyst estimates are pretty weak and you want to give it a 10% beat, those numbers look pretty attractive. So it all depends on how bullish you are in the AI space, and can Nvidia beat these expectations? If you think they can, Nvidia right now is sitting at a value at a great price, right? And a 10% beat, in my opinion, is easily doable. Now, the levels where I believe Nvidia is going to be very attractive, and I'm not saying we're going to get to these levels, but 115, I think, is my big buy zone at right now. Obviously, things can change in upcoming earnings, but as of this most recent earnings, 115 to 120 are my kind of strong adding points. Because if we look at the bullish case on 2 year from now basis, earnings per share are roughly 18, below 20. On just analyst average is 20. So for me, 115 is definitely a big buy point in my opinion, where I would start to add to my number one position one way or another via options or via shares. Now, this doesn't mean that 115 is going to hit. This also doesn't mean that I take this price to the needle, right? It's not like I would do buy at 115 exact. If we get maybe closer to 117, 118, in my opinion, $3 isn't going to make much of a difference, and I would still feel comfortable. So it's not like I have this set point at $115 exactly. It's somewhere around that range. I think anywhere below 120, I'm keeping a heavy eye on. Again, this doesn't mean we're going to get to those prices. Like I mentioned, I think 130 isn't crazily overvalued. It seems properly valued in my opinion, but because this is already my biggest position in my overall portfolio, it allows me to be patient and to add in when I really believe there's plenty of value on the table, and my risk to reward ratio is pretty great. And I believe that's going to be closer to 115. So those are my overall thoughts. Regardless, I think Nvidia in the long term of things is still pretty bullish. There's always a lot of fear and doubt in the market, especially with the AI space. But we just had earnings a month or 2 months ago from all big semiconductor companies, and all these players have said the same thing. AI demand is here, and I don't think that has changed within the past week or two. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.